investment stocks in my head. One goal in mind, to try to make you mad money. You can't afford to miss it. Today was traumatic. The pattern is not to have trauma followed by trauma. Shouldn't be down as much tomorrow. Should bounce on Monday. But before I can help you find your way out of the devastated Gulf Coast of stocks that are being hit by the 1-2 punch of mortgages and corporate credit, or as I call them, the financial hurricanes, before I can get you to the promised land, you have to promise me you will sell some things, sell, in order to be able to fund some buys for the bounce. And it will bounce. If you can't take the pain, and very few people can, as I've said, banks, brokers, they got to go. Home builders, most of retail, tried to bottom fish there, didn't work. Anything private equity. Anything levered to the domestic economy that doesn't have international business to bail itself out. These stocks not only can't be bought, they really can't be owned. And you got to sell them to fund the good stuff. And there is some good stuff. We can buy back later the stuff that you're selling when the storms have subsided and we're in a safer place. In other words, there will be a place to own those stocks, just not here. That's okay. We're Dow 13,500. When we were at Dow 13,500 going up, there were a lot of people who were negative. We got to 14,000. We said take something off. It's not right to put that group on. But we can build ourselves a wall against the flood right now. There are still stocks that will work, and they'll be the first to recover. Remember, 1/3 recovers first, and I've got that. But mark my words, don't buy if you haven't done any of the profit taking or if you're still in those other stocks. The Corden Group, the group that I've been telling you over and over again is no good. That would be undisguised piggishness. We all know how that turns out. Now look, after all the misery of today's sell-off, I know you're all desperate to know what will work going forward, what's right to buy right now, and there are things right now. I really don't blame you. I'm going to give you my emergency game plan right now. And when I say right now, I mean there's a lot of stuff trading after the market, like Riverbed, which I recommended yesterday, up really nicely. I mean, there's stuff working. Crocs up 8, so I'm not oblivious. It's just there's not that much working. You have to understand that the game is not all about buying. Today was a great illustration of why I urge you to take profits. I've been taking a lot of heat on Stock Picker, on the street, wherever I go, my email, saying, hey, listen, come on. You liked it, now you say sell it? Well, I came out last Friday and said you absolutely had to take profits for the week. It was a real downer show. It was a real downer show. And I couldn't stand myself that I had to do it because you know how much I like to be upbeat. But remember what I said. I told you that Louise Kramer, my late mom, would say after the big wins, it's time to leave the casino and go buy a sweater. I invoked my mom. Now, if you haven't left yet, you can still buy a t-shirt. I'm not giving you a list of stocks just opportunistically buy, right now. Sell what's bad, take profits in what you've made a lot of money in, and only then can you start to build your wall. So what can be bought? Here's your emergency game plan of what to buy. Now, remember, by the way, it is going to bounce. The market will bounce. You got to be in the part that bounces, not in the part that does that anemic little lift. First, the soft goods stocks that have good growth, they bottom first. In particular, we now have some great earnings. The best one? Thank you, Indra Nooyi. Pepsi. Pepsi's now down back to where it was before they reported that great quarter. Colgate. Same deal. Colgate. Come on. People are going to brush their teeth no matter what. How about the Kellogg reported a great quarter in the middle of the storm? Do you think anybody even looked at it? Kellogg had the best quarter I've seen them ever have. Kimberly-Clark. Yeah. Go blow your nose. People always do. Amazing thing. They don't use their sleeves even now. Second, the wild bull markets, they're coming back. Not first, though. I talk about machinery. I look, Caterpillar, getting killed. I think that's wrong. Foster Wheeler, yeah, I said it'll coming back. It's all right. Metals and mining, okay, I know everyone's worried about a worldwide slowdown. I'm not. I'm worried about mortgages. I'm worried about credit. I've been liking the Freeport. Oil and oil service, natural gas, a little harder. I like Schlumberger. Remember, Exxon's fault was they didn't drill enough. Not that they missed the quarter because oil's too not high enough. They didn't drill enough. They got to keep exploring. Schlumberger. Halliburton, too. Aerospace. Boeing. Let me write slob. Boeing. BA, nice decline here. Agriculture, Bunge reported a good number. Monsanto down badly. I think Monsanto's good. Now, third, the $80 to $120 stocks. I think they get you there. We're in a detour, obviously. Fourth, all week I've given you the green light on tech. The four horsemen on pullbacks work. Remember, they're up 17% from when I did them, so I can't be as excited as when I first did. Just to go over some that what I've been saying, I think Dell is right. I own Hewlett-Packard for my AxiomStrust.com, my capital trust, which is, by the way, very long-term oriented. You know I like Cisco. Okay? It's a telco equipment applier. That SpaceWorks, too. Fifth, I'll give you healthcare. Drug companies reported pretty good numbers. The one I like, Goldman Sachs raised numbers for today. I like Celgene. I can't blame if you buy some Merck. Cost containment plays, you know, it's Medco Health. Some of the diagnostics, I like buying some of those. Use these spaces to build your wall against the flood of the financial storms. But the bottom line is you can't start buying what's working until you've sold what is